Here's Dale Pinkert live from Hell on Earth, Southern California. Hope everyone's doing okay and that there aren't any fires and 108-degree temperatures and power grids being threatened for rolling blackouts. That's Southern California in 2022, everybody. So let's leave Southern California and go over to the UK and discuss what's happening here in the pound. Yesterday, I did a lot of coverage on the euro and my plan of attack after the ECB euro holding up a lot better. But I want to talk about the pound right here, and I'm going to do a little coaching besides some analysis. So a lot of you that have been following me, you mainly hear me talk about divergences and inflection points, but there's a lot of value in knowing whether or not a market has a confirmed high or confirmed low. And let me give you an example. So back here on the 5th of September, when we were making new lows in cable with a 21-22 reading on the RSI, the real simple implicator, and that's what I call a confirmed low. So what do you do with a confirmed low? As a trader, believing that markets rarely put in bottoms after confirming price, either a confirmed high with RSI confirming or a confirmed low, new low with RSI confirming the low. So as a trader, I'm thinking, well, if this is not the low, I should be looking for reasons to sell it on a correction, because I believe that this RSI reading is not going to hold. So then you have to go to your other tools and your other strategies and look for retracements or moves to moving averages or back towards previous support level that became new resistance and sell a rally. So I think you'll find that as valuable. In fact, that keeps you with the trend. So you could use RSI to keep you with the trend. When it's confirming a high or a low, it's still in a downtrend. So if a market's in a downtrend and it bounces, it's an opportunity for me to sell. And wanted to just make that point that RSI is not just about overbought, oversold, but it actually tells you what side of the market you should be planning to take advantage of price action. Confirmed lows, sell rallies. Confirmed highs, buy breaks. So let's talk about where cable is right now. And something else I want to talk about when you have something like this kind of divergence, I don't have to put my cursor here and then put it here to see whether or not I really have a divergence, do I? There are many examples where, it'll be close to the same level. Your best divergences are where you don't need a cursor, and it's very obvious to the naked eye that there's glaring divergence here in cable. And those are the best divergences to play. Also, the setups when it's diverging and you're looking for a turn, a bottom, you want to see the RSI hold above 30. That's something else that's happening here. So the headline for the video is the pound at 114 is not a short. So you may not want to get long. I like to hear the ice crack. So, I'm going to take advantage of it. But it is a reason to cover shorts, right? Because you don't have the same RSI structure here that you have saying, well, the trend is starting to lose momentum. There should be at least some kind of bounce, no guarantee. I mean, we could come in and you've seen many examples of throwovers or throw unders where you have a wedge line that, I wanted to show the 4-hour for divergence, but look at this return line, how long it's been going on. So, you have a couple of hits. Let me move myself out of the way. Going back to June of this year, tagged again here, tagged again here. The daily's saying that it's not going to be a major bottom, but there could be enough of a squeeze for there to be, perhaps a move. We've had one heck of a move to the downside, right? When you look at the weekly. So the major breakdowns all the way back at, 128. And the highs that we had in cable were back around 142, not that long ago, about a year ago, maybe a year and a half ago. So that's 2,800 pips. You just take 14 from here, and it just a 50% correction could get you back towards 128 level. Of course, a lot of work to do before that, but I just wanted to give you a longer term picture. Now, the weekly is diverging. It's not ideal because it's under 30, but you could tell really the last confirmed low was May of 22. And we're making new lows here. And you got a pretty good rally on this divergence, right? Not bad. 118 to 122, 400 pips. So if we get 400 pips from here, you should get, 118, 119. Anyway, the main message being, I don't think cable's a short down here. Cover your shorts. And take to heart what I'm talking about with confirmed highs and lows. And you could use them in your trading plan. We could just look at the euro, which is up today. And yesterday I was talking about a potential 3 drive. And we did make new lows here in the euro. So, everything's kind of a binary event tomorrow if we get, 3/4 or a half. But, I learned today something from one of my trading buddies, Ryan, who said, it's not the hike, it's the terminal rate. So if they go a half, but say they want to take it to a much higher level like the Fed's doing, it's not the interest rate hike, it's a guidance towards where they want to end up. That's going to matter. So if they come in with 50, yet say this is only the start of much more work to do, that would be a hawkish hike. If they come in and they do 75 and they go, I think we're done, that would be a dovish hike. So euro, could we still trade back down towards this return line coming in here? Yesterday I said about 98.35. We almost tagged it yesterday, 56, close enough for government work. So, we'll see what happens with the ECB. I think there's enough divergence to want to be a buyer if it happens in the low 98s, 7.5 or so. When I look at the dollar, it's continues to diverge. The only place that it's threatening to blow out the divergence right now is on the daily. But if you see the daily here, we're still lower than we were back at this peak. I think people that are pressing alongside the dollar, short side of euro, when you think about it, how right have you been being short the euro? I mean, it's basically been in a 300 pip range since the July low. And I want to remind you again that the COT setup has a lot of people very short euro, very long the dollars. It's a very crowded trade. So we'll see if we could get that reversal. Yesterday I talked about the potential for an outside week, and what we had to do for an outside week was take out the previous week's low, which was an inside week, which it's accomplished, and then take out last week's high, which is par 79, which is still 170 pips from here. Last week's high, to have an outside week, be a very bullish development if that happened, and the dollar would take a pretty good hit as well. And as you can see here, euro on the weekly looks like it's a second divergence. We diverged here similar to the pound and had a decent rally, 300-400 pips. Let's see what this generates here, even if they try and wash it out one more time towards the 98.30, 97.60 level. Something else that's a feature to me is silver acting pretty good. In fact, it's threatening a falling wedge breakout here. Okay, we need closes back over here. We tried to break out, false breakout, but look at the pullback. Almost back to the return line and heading up. So silver's acting pretty good. Silver's up 12 with gold down 40 cents, which means the gold silver ratio is starting to roll over. And as I said yesterday, a red candle here would give me drive 1, drive 2, and drive 3. And here's another example of glaring divergence. I don't need to put my cursor over the last RSI reading on the weekly to know that there's glaring divergence. I see it with the naked eye. But here, if I was looking for a divergence, which it wasn't because this was a higher reading. So if you need to get the reading to see whether or not you have a divergence, whether at lows or at highs, it's not a great divergence. And on highs, if it's over 70, it still has too much mo, just like if it's under 30 and diverging at the lows, it's got too much momentum to the downside. So we're getting a rally in S&Ps. Perhaps Apple has run its course, really pretty shallow correction in Apple, starting to grind something out here. If you're bullish the market and you think the market could rally, Apple's been the leader. I think they have a big event today. Again, I don't think I'd be short S&Ps down here. I had this trend line drawn. You could go back to many videos that I did on my own or did with Mike, and Mike will be back with you today. And, you know, back here, I didn't think that we would get here, but I said, I'm not getting bearish until we take out this line. And that's 38.66 right now, 38.70. We came pretty close to tagging it yesterday at 84. So, you know, 14 handles in the S&Ps is close enough for government work. And I do believe if we are going to get a rally in the S&Ps, it's going to be accompanied by sell-off in the dollar. So we'll see what happens there. Crude is under some pressure. And I know you'll find it kind of strange. For me, I mean, to me, it looks like, you know, you're getting some type of major breakdown, but it's diverging. People will say this is a major breakdown right here, but I don't trust it. I see better, cleaner trades. I'm not doing anything here. And if you were here in TradeGate Hub, I'd ask you right now, what kind of low do we have here? Is it confirming? No. Okay. So I don't want to be short a market that's making new lows. Plenty of bearish sentiment in the oils with the RSI diverging on the 1 hour on the daily, also above 30 here. So if you were short, it's at least a cover in my view. Even on shorter term, the right here. And, you know, it'd be helpful for the market if you had another pop in the oil. A lot of people see it's negative. And last, let's kind of wrap it with the 10-year yield. And, you know, looks like, you know, I was definitely wrong. I thought we were going to have a failing rally. Yeah, when I look at it right here, and I know we're pretty close to this 350 yield level that we had. And of course, the Japanese peso finally got to what a lot of technical targets. See, here's another lesson in confirmed highs, right? On multiple time frames that, you know, that I ignored. We were having some divergences here, but, you know, when you have confirmed highs like you had here, you buy the pullback. Here's another confirmed high. It moves sideways, you buy the pullback. And here's another confirmed high, not much of a pullback, but this is something I can't short. I mean, doesn't say, and I was looking to short it before we got, you know, a blow-off move to the upside with yields shooting up. I thought we might peak in here at this 140 level when we had divergences, but they were blowing them out. So thankfully, knowing about confirmed highs, once they started blowing out the divergence here, it wasn't a short. As I said, I don't know, a week and a half ago, I was going to wait for the end of peak to add to my precious metal position. But what's interesting, that's another positive for silver. and gold. I mean, gold hasn't taken out its low the move from a week ago. We could be putting in a higher low. I just think with gold silver ratio starting to roll over, silver's my preferred long. That silver, which bottomed down here, and again, you had divergence, right? It wasn't great. It was under 30, but now we're threatening this falling wedge formation. Also, there is backwardation in the futures, which is the opposite of a carrying charge market. And backwardation means there's near-term demand, so people are paying the premium for the nearby futures, and the deferred contracts are actually at a discount to the nearby. So silver showing a heartbeat here. Like to see closes back over the high of the move of the first rally, back over 1860, and then I think we're on our way, and it could end up being major, especially if we get this breakdown, which is starting to look like it's a possibility. XAU back under 92.20, another 100 pips or so is going to look heavy, and then we'll see what happens here at 87, and the big line in the sand is going to be here at 83. So 83 from 96 is 13 handles. So that means we could trade back towards 73, back towards this major support on the gold silver ratio. That should be some outstanding outperformance in the silver compared to the gold. So I want to wish everyone a lot of luck tomorrow for the ECB. I'll be here with one of the best FX news traders on the planet. Adam Button will be with me, and want to invite everyone to join us here. Our sponsor is TradeView Markets. You could trade almost every instrument on different platforms with TradeView with competitive spreads. And as I always leave you sitting here looking at the smoke in the sky in California and people losing their homes, that if you're safe and you're speculating, that means you have risk capital, meaning you have extra funds or you wouldn't be trading. Don't trade your mortgage money. And so it's important every day to count, not just count your pips, count your blessings. Adios. I'll see you with Adam Button tomorrow, same time, same station, tradegatehub.com, powered by TradeView Markets. Adios.